Good morning. The Nifty came tantalizingly close to breaking below its 200 DMA recently and managed to rebound on the back of steady FII inflows. However, the threat of the main indices slipping below the key technical barrier remains in place. In the meantime, the rupee has suffered a fresh setback due to concerns about elevated oil price and its impact on the India's external account. FI inflows have been fairly solid throughout this year owing to the easy money policies being pursued by the central banks in the developed markets, but doubt persists regarding the sustainability of this trend going forward. So while the liquidity could remain supportive for a while, the big macroeconomic picture remains a bit of worry. Globally, slowdown is visible across the world, including China. On the domestic front, the worries are all too familiar: sticky inflation, high interest rates, swelling twin deficit, and policy impasse. We see a slightly lower start today. Asian markets are mixed and struggling for direction. US stock indices managed modest gains on Friday. European benchmarks finished higher on Friday. Trading this week will be choppy due to F&O expiry. Keep a close eye on the rupee and crude oil. Investors should stick to a defensive strategy for the time being given the uncertainties over a whole host of macroeconomic factors, both domestic and global. The main equity benchmarks might correct in case there is no rate cut on April 17th. Already the extent of the RBI's rate cut for FY13 has been scaled down by post the union budget. Indian markets will also take their cues for the short-term movement from the government borrowing calendar for a first half of FY13. The Nifty continues to face sustained selling pressure above 5,300 levels, which has led to it notching a 5-week losing streak after the 7 straight weeks of stellar rally. The breakdown levels for the ongoing consolidation is seen at 5,190, below which the undertone could be bearish. The FIs were net buys of Rs 94.6 million in the cash segment on Friday, while the domestic institutional investors were net buys of Rs 1.86 billion as per the provisional figures released by the NSE. The FIs were net buys of Rs 20.35 billion in the F&O segment on Friday, according to the provisional NSE data. Moving on to recommendations, the technical calls for the day are: we recommend going short on HDFC April futures above Rs 672 with stop loss placed at Rs 688 and for the target price of Rs 640. We recommend traders to short 40s March futures below Rs 104 with stop loss of Rs 107 and for the target price of Rs 97. Our derivative strategy for the day is long Mahindra and Mahindra March futures above Rs 686 for the target price of Rs 706 and a stop loss placed at Rs 676. Thank you. Wish you have a great day ahead.